Hello everyone. Today I'll be going through my portfolio and showing you the trades that I'm doing in both stocks and options and my overall strategy of my portfolio going forward. As you can see, I've made roughly 200% gains since the start of the year, and basically detail in the graph my deposits for the year, starting balance, and then also my realized and unrealized gains up to September 5th. Additionally, this account that I'm going through today does not include other accounts that I have, and I've already made more than $1 million on Tesla stock this year, as you can see below, which is copy and paste from one of my accounts. Okay, so my overall strategy for this private account that I have, my other one's in the retirement account, is basically Tesla for the long term, and also partially on margin as well with the Tesla stock, basically about 20%. And then for the other margin I have available, I'm doing sell puts, and if those sell puts get assigned to me, if the stock gets assigned, then I turn around and write call options. And I do those on different stocks. So for these options, I'm not using Tesla for the stock. And I have three main ones that I'm doing. CCJ, which is a uranium producer, and Square, which has the Cash App, Square Devices and Restaurants, and Ford. This is also to just kind of balance on the Tesla a little bit. So if there's a dramatic drop in the market, then the shorts that I have in Ford will typically also basically go down, which means that my value will increase, or my gain will increase by shorting that stock. But it's not an exact one-to-one. And so here's my balance, basically starting at 4,000, depositing roughly a few thousand every month. And it's peaked so far this year at roughly 136,000, and now its current value as 111K right now. So from the deposits and starting balance, put in roughly 38K into the account, and my total gain this year is roughly 78K. These numbers don't quite add up because there is still, if you were to compare them against here, because this only shows the realized and unrealized, and some of these haven't been finalized yet. They're still in a in-between state. For example, if we take these September 4th ones, they're already assigned to the account with the amount, but yet they're still showing in the option category under unrealized. So these haven't been updated, and it takes a few days. So that's why these numbers don't quite match with the current balance. So how well does this strategy work? Well, anytime that you're going on margin, you have an increased risk to that. And so I've already had my first margin call. And so then I will go through how I corrected that margin call. And so let's take a look at that next. Margin call was roughly 6,800. And that was after I deposited 1,000. So as I mentioned before, I usually put in 1,000 to 2,000 a month. So even after putting in the 1,000 for the month, I still owed $7,000 to match that call, the maintenance call that occurred. So that sounds quite bad, actually, and it was a rather red day that day, so about down 18%. But as you can see, I'm actually only 24K on my margin balance. So that's actually not too bad, but my maintenance is 107. So this kind of goes to my strategy. So I am doing sell puts, and the way that my brokerage does the maintenance requirements, it expects all the options to be completely worthless. And so it assigns very high maintenance requirements when I do a sell put. And also I'm not actually using my margin balance. I should say I'm not on margin. I am using the margin that is available to me, but I'm not being charged interest yet. It's only when the stock is assigned and my margin balance goes up, this is what I'm getting charged interest on. So when I do all of these sell puts, and those sell puts are out of the money and they expire worthless, I don't get charged interest for that. And so these are all the ones that I set up for the previous week that expire not only this week but also into next. So with this 7,000, that sounds quite bad actually. And if you don't have 7,000 in the account, well, how do you close that out? Well, so the very first thing that I did is I started to see things kind of go south. So I went ahead and I shorted additional forward stock. And so then I closed out that position the very next day. And made like $15, but then that gave me another 1,000 on the maintenance requirement. And I wasn't in margin call at that time either. And additionally, I closed out an NVTA option that I had. And the reason why I did that is it doesn't expire till the 18th. And it was a 3,000 maintenance requirement. It was a $30 put. So they're expecting that whole 3,000 to basically expire worthless, which wouldn't be the case. It was actually still well above 30, but again, it was too far out. I needed to meet the maintenance call, so I closed it. And additionally, I closed the very two that I bought previously. At the end of the day, with those 3 trades, I actually only lost $64 to meet the $7,000 maintenance call requirement. After I did those closes, and then at the close of business on Friday, I was still in a current maintenance call. And it didn't actually matter because when they assigned the stock, so I have these very high maintenance requirements. So now this one was in the money. This would be assigned to me, 700 shares. And the same with the square. This was in the money. And so this would be assigned to me as 100 shares, one contract. And so if you look down here, this is the corresponding Saturday after they assign the 2 shares. So now I have 700 shares here, and you'll see that that maintenance requirement drops from 7,700 down to 2,200 for the maintenance. And the same with the square. The square was 15,000 requirement when I'm doing the sell puts. But then when they actually assign the stock, the maintenance requirement drops to 1/3 of that. And so now I actually have an option buying power of 18K and stock buying power of 60K. Now this kind of goes against my strategy of having a higher maintenance balance. And so now what I'll do is I won't be writing any more sell puts. I won't be using this amount. I'll actually turn around and I'll sell the call options now on the CCJ and on the square. And these two are still sell put in place. And this one is a sell put on the stock I'm shorting. The maximum gain would be at 650. So if it goes below 650, then my short position closes and I get to keep the gain from 690 to 650. And in addition to that, I get to keep this premium of $60. That will basically expire at the end of the week. If it's above 650, like 660, then I still get to keep this premium, and then I can turn around and write another option, another sell put option for those 1,200 shares or 12 contracts for roughly $60 per week. So that's kind of just a nice premium income that I have coming in, and I make roughly about $1,500 in these option premiums if they expire worthless. If I have to turn around and write the call option, I typically make a little bit more on that, but then I also get charged margin interest. And so how much margin interest have I been charged? Well, if we actually go back to the first screen, then I show that to you. So far this year, my total interest on the margin is $573, because most of the time I'm doing sell puts, and those sell puts expire worthless, so I'm not charged any interest on those. So I'm using the margin that I have available, but I'm not actually on the margin and getting charged interest until the stock is assigned to me and I'm writing call options. On my maintenance call, I have plenty of equity available or margin available if this continues as a downtrend. And these call options that I will write, so let's go ahead and look at what those values are that I'll get for the next week. This one we'll look at is square. So we'll just do all the money. So it got assigned to me, so I paid roughly $149. The strike price is $150, so I'm going to turn around and write the call option at $150. I think it'll probably end up closing at the end of the week over 155, but again, that's not my strategy. I don't like to be on margin that high, so I'm just going to turn around and write the call option right at 150 at market open. Roughly $4.30 or $430 for that. So if it's above 150, I only get to keep this premium and I lose the stock. If it's below 150 at the end of Friday, then I keep this premium of $430, and then I can turn around for the very next week and write a call option again. And so that's quite nice. But the thing is, I'm still getting charged the interest on that $15,000 position. But it does not amount to much compared to the premiums here. And that expires on September 11th, 5 days from now. So now let's look at the CCJ. That's the other one I have 700 shares on. Okay, so then we'll view that. And so I'll turn around and write the call option on this one as well, on the $11 call, because that's what I purchased it at, was $11. And it looks like from this I'll probably get about 22 cents. Let's just say 20 cents. So that's still 140. So 20 cents times 7. So it's $140 that I'll get for writing that. If it's above 11, then I lose those 700 shares. And in addition to that, this will expire worthless. If it's below $11, then I will have 1,700 shares in the account, and then the very next week I'll write 1,700 shares. So going forward, I'll get 140 for the premium roughly on the CCJ call option for next week. And then I'll write that on Tuesday when the market opens. And for the square, I'll get roughly $430 for the writing the call option, assuming the price stays the same. And then depending on whether it's below 11 or below 650, I'll either keep the forward stock or be able to rewrite the option, and the same with the CCJ as well. So if it's below 11, then I get an additional 1,000 shares. If it's above 11, then this expires worthless, and I turn around and do sell puts again. And then I lose the 700 in here, and I basically sell it off at $11 a share plus the premium that I get. All right, so that's kind of my overall strategy. So hopefully that will help you in your strategy if you're looking at options, and maybe another way to do that. A lot of people just will buy the call options. I see that's kind of risky. I actually take it the other way, where I do the selling of the option contracts. And the premiums are smaller. You do limit your gains as well, but that's the strategy that I have. And my main strategy is basically buying Tesla and accumulating Tesla. And these premiums, as it knocks my margin down below 25K, then that frees me up to start purchasing more additional shares, especially when it's at this lower price that it's at right now. Okay, so yeah, thank you for your time.